Good evening, ladies and gentlemen. This is Barry Norman on behalf of Investing.com and X90, and welcome to tonight's class on support and resistance. Now, tonight's class is powered by Investing.com, but is sponsored by X90, one of the leading online providers for CFD trading, as well as stock trading in over 20 countries. It is a phenomenal platform. There are very few brokers out there. There are very few brokers out there that have their own technology. Most use a technology provider. When you trade with X90, you're trading on their own technology, and they've made their platform so fast and so easy to use that it is a great platform. We're going to go take a look at it right before we start class. But you can trade shares, indices, commodities, and Forex through our CFD platform. You can open a live demo account, and there is no information, just your name, password required, no credit cards required, and then you can trade and try out their platform. But you'll find there's no commissions. It's safe and secured, and you get a 100% deposit bonus up front when you start trading. Now, you can start funding your account with as little as 100 euros, and you can be trading in no time flat. They offer up to 500 to 1 leverage and very, very low spreads. So let's go over and take a look at the platform real quickly before we start class. Let me pop that up on the screen. We're going to be looking at the live platform. And here we go. I've got 2 open trades going on. But let's go over to the trade on the platform. And as you can see, it's very friendly. You can click on your favorites or the fast risers and falls. You can pick on all the currency majors, or just commodities, or set up your favorites. If you look on the right hand side, just store what assets you like, and then they're just up in your favorites. You don't have to go searching for them any longer. You have all your news and your insights going on the right hand side, but you can turn off the notification screen. And we just click on trade. We have our charts, incredibly great charts available right here at the bottom of the platform, all for you to use at your convenience, but they're very, very nice. They're dynamic charts that do everything. You put your indicators and oscillators on them with no problem at all. You can set up your color preferences, all of your personal preferences. And if you notice, their platform is very easy. So let's go over. I'm going to click on my favorites. Well, we'll take all the popular ones. So we're going to take the pound US dollar right now. It's currently trading at 128.82. We're going to sell at 180.82, or you can buy it at 128.84. It's dropped down about a couple pips. It's been trading between 129.51 and 128.48. So we think the pound is a little bit too high at the moment. And so we're going to sell it. We're going to take whatever amount we want. So we're going to just take 10,000 pounds. So right away, we went a 10,000 value of pounds. And as soon as we do, it figures out our margin. We're only required to put down 53.13 or 48.80 euros for the margin. So we want to close it at a profit. We can set our automatic close right away. So we're going to decide how many points we want to make on this. So we'll tell the system to close it automatically if the euro bounces down to 128. Oh, let's see. So we're going to sell. So we want it to go down. So it's trading at 128.82. So we'll close it at 128.52. We'll take a 30 pip profit. Okay. We'll also want to take our stop loss. So we're going to protect ourselves. So we're going to take an equidistance. We're going to take, say, a 30 points. So we'll close it at 29.12. And we have all advanced methods, and then we're going to sell. We've now sold the position, and we are done with it. And we've got our trade open. We want to see our open positions. All we do is go up to the top and click on our open positions. You can see I've got my euro. I traded it earlier today. It's 7 pounds and 7 euros in my favor. Brent oil's done pretty well. I'm going to close out my Brent oil trade and take my profit. Okay, I'm going to close out my euro trade also and take my profit. And we picked up a good deal. Now we have our pound trade sitting out there. And Hold on, I want to adjust something right here. Give me 1 second to make an adjustment on my PowerPoint. Okay, yes, and you can open up your account in your local currency, US dollars, pounds, euros. You just set it up when you open up your account, but you just can click on anywhere and set up a demo account with no problems at all. And the nice thing is you can set up alerts, you can set up your favorites, you can go, get all of your data. You have the nice charts. It's a great platform down at the bottom. Everything's right on this one concise platform. You have your closed position. It's clean, neat, and less confusing, and it walks you through everything. They also have a great tutorial. Anytime you're not sure, just click down here on the right on the bottom, click Start Tour, and we can click on a platform overview, and we can just follow it. They'll take us right through step by step, showing us how to open and close, how to use the platform, and then also they have a tutorial on how to actually make a trade. And just follow it along. It's one of those great platforms where they've done everything, they've thought about everything for you, and they've got everything set up to make your trading easier. There is nothing to download with X90. Everything on X90 is web-based and easily available for you. So I just signed in and I am on my web base right on my platform. Just click on it and trade right here or on your mobile device. So this is how easy it is to trade on X90, and they're a great place to try and start out. You notice the platform's not cluttered. It's not full of a lot of stuff. It's easy, okay, and friendly. So remember that when you get ready to trade. So let's go over to our webinar and get started with tonight's class. So hold on, let me get our PowerPoint back up here on the screen. And tonight we're going to be discussing support and resistance. Now, support and resistance is a very important concept that everybody who trades must understand. Now, defining the concept of support and resistance is fairly simple. It's not very complicated. It's not full of a whole bunch of mathematical calculations. In fact, I'm going to teach you tonight my favorite way, and that's called eyeballing. But then there's many ways to get support and resistance. But first, before you figure out how you're going to get it, it's understanding what it is. So when discussing it in the context of the stock market or the financial markets, it defines the level at which buyers and sellers step into the market and where the law of supply and demand come into play. Imbalances in supply and demand create support and resistance levels. For example, when an overwhelming high number of buyers step into the market, an indication of support is being put into the market. Conversely, a large number of sellers indicate there is overhead resistance preventing the stock or the asset from moving higher. Now, that's a lot of words. Okay. The price levels which create support and resistance in a stock or an asset only tell half the story. We mentioned a key phrase, overwhelmingly high. Now, volume is the second half of the equation and shows us the strength behind the buying and selling of support levels. The stronger the buying and selling at a support or resistance level, the more important of a signal is being given. Now, it's an increasing popular technique for determining support and resistance can be derived through the use of even Fibonacci levels. These levels are viewed by some as imaginary levels, but have now developed a strong significance due to their widespread use. So let's talk about what these support and resistance levels are. Now, the way I try to explain them in an easy visual way is imagine an elevator. The floor below your feet is what's supporting you. When you want to move up, you've got to break through the ceiling above to move higher. So that's your resistance level. When you move up to the next floor, that ceiling that was your resistance level became the floor under your feet. So it's now your support level. And the next ceiling is your resistance level. So as price is moving up, it breaks through the floor and goes through the ceiling. Now, if I said you were gold and I painted you gold and shoved you on an elevator, now gold has no hands, so you can't push the buttons, so you don't know what the next floor is or what the next, where the elevator is going to stop. So you have to understand by looking at the historic value and where prices have stopped in the past, where that elevator might stop. So imagine you're in a 4-story building. The first floor is retail, the ground floor. The next floor is high-end offices. The next floor is the conference room. The next floor is storage, and the roof deck is where there's smoking and a lunch lounge up there and some vending machines and everything else. Well, by analyzing the movement of the elevator, the time of day, like, if it's late at night, there's going to be very little movement in that elevator. Maybe somebody, an attorney working on the first floor, is working late, so he might push that elevator, take it up to the roof. But since there's no conferences scheduled, the conference floor is going to be dead. There's nobody going up to the storage floor, so that's going to be dead. So you can estimate or pretty well figure when that elevator starts moving, what the support level will be and what the next resistance level will be. Because if you were gold and I pushed you on that elevator and it started to move, you could guess or estimate by understanding what's going on that that elevator would move up to the first floor, pick up that attorney, and then most likely go all the way up to the roof floor and then come back down to that first floor. So these become your support and resistance levels. Now, during the day, when there's conferences going on the second floor, you have a different thing. And if you know a conference is scheduled at 2 o'clock and the elevator starts moving up, there's a good chance it's moving up to that second floor. So these are how you determine support and resistance levels, by previous moves of the market. Now, indicators are a great addition when looking at support and resistance levels. This is because the indicators will act as another form of validation that the security is approaching a support and resistance level. Since support and resistance levels act in a cylindrical fashion, meaning the price will bounce off the highs and lows of the range, oscillators are a very good fit. Oscillators, like support and resistance levels, will bounce from one extreme to the next. So support and resistance represents key junctures where the forces of supply and demand meet. In the financial markets, prices are driven by excess supply and excess demand. These terms are used interchangeably. As demand increases, price advances, and as supply decreases, they decline. So what is support? So now let's give you another hypothetical, because I like to give visuals. I like to give little stories from real life that we can tie back to these things. So let's go back in the U.S. 150 years ago, when we really had the cattle auctions in Chicago that Chicago became famous for. And you had driven your herd of cattle, or you had gone on the train from your ranch to buy some cattle. Now, you arrived there Monday morning. You told your wife you would be home the end of the week. You know you need to buy 100 head of cattle. Now you get there, and the auctioneer is hollering 63, 63, 63, 63. It's 63 cents a pound, say, hypothetically. Oh, I have no idea what cattle sells for. Okay. There's no buyers. He hollers 62, 60, or 60, 62.50, 62.50. There's no buyers. He hollers out 62 and he gets a buyer. So he doesn't go down any lower. He's got 62, so now he's going to 62.20, 62.20, 62.30s. No buyers. So he goes back down to 62 again, gets a buyer again. Goes back to 62.05, he gets another buyer. Goes up to 62.10, no buyer. 62.20, no buyer. He goes back to 62.05 and he gets a buyer. What has happened? 62 became a minor support level, but 62.05 became a major support level. So that is the price that auctioneer is looking at getting above. He's going to keep pushing above. But because it's Monday, all the cattle just came in. There's lots of cattle for sale. It's beautiful weather outside. Nobody's rushing to get back to their ranches. But by Tuesday morning, he's out at 62.40, 62.40, 62.40, and he's getting no buyers, but he goes to 62.30 and he gets a couple buyers. Okay. So he's now wiped out that 62.05 because a lot of people saw that the available herd from yesterday was half gone already. So they're saying, I better buy now. So they start buying at 62.30, 62.30, 62.30. But you know, you're in no rush. So you're going to wait. You're saying 62.30 is too high. I'll buy a 62.05 now. Before you wouldn't buy a 62. Now you're willing to buy it. It goes back down to 62.05. Why? Because 62.05 was a previous support level. But guess what? The weather changes outside. The skies get dark. And now you start to think, I better buy because I may want to get out of here before the storm gets in. Okay. And maybe all the other buyers are thinking the same thing. So he says 62.30, 62.30. He says, you know what? I'm going to buy. Well, he's now established a new support level. But then the weather clears up and a whole nother herd of cattle comes in that didn't make it in by Monday. They were running 2 days late. Now he's got a ton of them. So now he's hollering out 62.30, 62.30. Nobody's buying. Goes down to 62.20, 62.20. Nobody's buying. Weather's turned nice. There's tons of cattle out there. He goes down to 62.05 and still gets no buyers. Goes down to 62. He gets a buyer again. So what happens is 62 became your next support level. As 62.05 became your resistance level, and 62.30 was a bigger resistance level. So these are the levels based on supply and demand around where you would expect markets to hem and haw. Doesn't mean it won't break through. Doesn't mean there's not going to be extenuating circumstance. What it means is price doesn't move in one direction. It doesn't move straight up. It moves in peaks and valleys. They may be little peaks and valleys, but you expect some type of reaction at the support and resistance levels. Now there's because there's psychological levels. Now there's also other levels, like if you notice, I didn't say 62.12, I didn't say 62.13, 62.14. I said 62, 62.05, 62, because whole numbers also have a psychological edge. Because most people don't think about, if I say to you, how much is Euro trading for today? You'll say, oh, in the low 109s. You won't tell me it's at 109.47 because we're human beings. We don't think. Now, when we make our trades, we trade that way. But 109.25 and 109.20 become psychological support and resistance levels if the price is at 69 and say 109.22, because we think in whole numbers. How often do we really talk about gold? We'll say gold's trading about 12.50. It could have been 12.48.97, but we'll say about 12.50. So support is the price level at which demand is thought to be strong enough to prevent the price from declining any farther. The logic dictates that as the price declines towards support and gets cheaper, buyers become more inclined to buy and sell at a specific price. Okay, sorry about this 1 second here. Okay, now, support does not always hold and break below support signals that the bears have won out over the bulls. A decline below support indicates a new willingness to sell or a lack of incentive to buy. Okay. Doesn't mean that the price won't fall below it or above it. Sometimes the buyers are just worn out. Sometimes the buyers just taking a break, or there's other things happening and they've gone to pay their little attention over at the pig auction or over at the chicken auction, and then they'll be back over in a minute. Okay. But we would expect something. But sometimes it's just lack of incentive, it's lack of enthusiasm. Okay. So sometimes price sits. So Support breaks and new lows signal that sellers have reduced their expectation and willing to sell at even lower prices. In addition, buyers could not be coerced into buying until prices decline below the support or below the previous low. Once support is broken, another support level will be established at a lower level. Support levels are usually below the current price. The support level is what holds up the price at where it is. But it is not uncommon for security to trade at or near a support level. Now, technical analysis is not an exact science, and it is sometimes difficult to set an exact support level. In addition, price movements can be volatile and dip below support briefly. Okay. There is no law that says price cannot stay above a support level or what cannot break. And when it breaks below a support level, that becomes a resistance level. But you would not, in most cases, you don't expect it to plummet right through. You expect some type of logical consideration at that level. And then resistance is just the exact opposite. Okay. Resistance is where price moving up can't break above. Support holds up the price. Resistance puts a difficult time. So when price is moving up and the euro's at 109.22 and 109.25 is our resistance level, we would expect it as it moves up to the 109.25 to touch it. Okay, it can go right through. There's no rule, but we would expect it to at least bounce off of it. And when you look at charts, sometimes you see the more bounces off it has of a support level or resistance level, the more valid that level is. Now, also, when price is declining, it is the exact opposite of when prices are climbing. So when price is falling, the support level is above the price and is meeting its resistance as it's tumbling down. So once again, if you close your eyes and just imagine the floor and the ceiling in an elevator, and you're going up. If you're going up in that elevator, the support is below your feet. If you're coming down in that elevator, you're trying to break below your feet to get lower. Okay. So it's not a difficult concept. It's just one that you have to kind of get your arms wrapped around. So another principle of technical analysis stipulates that support can turn into resistance and vice versa. So we're looking at a chart on the screen of the NASDAQ. Okay. So we can see, and it's an old chart, but as we can see, price moved up and hit this 92.9, it's like at 937.50. Bounced off it, came back down. When it went back up, you can see these tops hitting that level, and then finally it broke through. Okay. So in this case, as it was moving up, it was resistance because the price had to break through it. Now it's above it, and guess what? This now becomes support. So when we see the price declining, what's it do? It tends to decline back down to that support level and then bounces off of it again. Now it could break through it, but this level was support here, was resistance here, and then became support here. So as you can see here, as price was moving up, this was a critical juncture for this price to break through. It bounced off of there and came back down. That validated that support line, that resistance line. Then it eventually came back up and broke through it. At each level of this support and resistance, you expect market reaction. You expect to see this price always have significant importance. Okay, so here it had some importance. This was months before. It continued to have importance as the trend changed the opposite direction, and it continued to import. So that tells us right there also, moving into the future, that that price level is critically important. So once the price breaks below a support level, the broken support level can turn into resistance. The break of support signals that the forces of supply have overcome the forces of demand. Therefore, if the price returns to this level, there is likely to be an increase in supply and hence resistance. Okay. other turn of the coin is resistance turns into support as price advances above the resistance. So as you can see, it's not very complicated, and finding these are not complicated because there's many easy methods. Now I use what I call a triple strategy. I always have on my charts 3 different support and resistance levels derived from 3 different methods, okay? Because it's very important. These levels will help you estimate what you expect, where you expect to see a market action or reaction. They also help you to determine where you might want to put your take profit and your stop losses. Okay. If you're trading an asset to go up, you'd want to make sure that you put your stop loss somewhere along a critical support line or right below a support line. If you're trading to go up, you'd want to look and see where the resistance lines are, because then you might want to set your take profit right at or right slightly above that resistance line. So if it doesn't break through and bounces off, it'll close your position. If it does break through, you can keep moving your levels up. But they help you figure these things out. Can you guys hold on? I have some gentleman here who thinks he's in a private session and is barraging my screen with questions after questions after questions. Okay. And so again here, we can see where on PeopleSoft, we've established previous support and resistance levels. And we can see on each one of these how price moving up or down became critical. Also, the more times that price was critical, the more important it is when we figure out where or what we expect price to do. So there are many tips for using support and resistance. They will help you, number one, watch for breakouts. As we noted, prices can and do cross their support and resistance levels on the way to forming new trend lines. Use the current level as guides, but you can also have multiple support and resistance lines, or you can have support 1, support 2, and support 3 out, resistance 1, just like the floors and elevators. If it goes through this, do we expect it to go to the next? Okay, and you can use those. I have my own system where I actually use 2 different support levels. I call it dead man zone. When the price moves in the dead man zone between 2 other support levels, I don't trade in it. That's where I close out my trades. But they're all types of strategies you can use. Tips. Okay, we're going to talk about tips. These are just tips. They're little bits of information. Okay, they're not guidelines, they're not laws, they're not even rules. When charting the price action of an asset, expect to see at least 2 price bounces before considering a given high or low to be a resistance or support level. You have to not just draw lines on a chart. And we're going to go over to some live charts in a few minutes and put some lines on there. But we have to understand the concept first. Preferably, you want to see 3 bounces since each one strengthens the signal. 3, asset prices tend to test support and resistance levels without breaking through them. You'll likely become more nervous when this happens. It's normal. Calm your nerves, learn to trust your charts, and when a breakout occurs, it usually does not in the context of forming a new price trend. Your charts should give you a heads up about that in advance. If you think it's going to change the trend because it's bouncing off of it and not breaking through it, you need to use other indicators and oscillators. Okay. Don't panic. And don't get lazy with your charts. The more you trade a particular asset, the more you'll feel as if you know how its price will move. Be warned that, especially in binary options, have a surprising, even the most experienced traders. Intuition is important, but tracking price action, keeping accurate charts, and collecting reliable data is much more important. If any of the above concepts seem complex and confusing, don't worry. With time, you'll figure them out. Now, it's not just random. Resistance is not just some random area where price turns around. There are potential sellers, traders who have sold a Forex pair once before, and remember the collective power they had to push price lower. There are also buyers who went long at a support and were disappointed when the price did not go higher. Okay. What we want to look for is a couple things when we're determining support and resistance levels. One, how recently were these prices reached before and reacted to these prices? Because sometimes if prices moved up and down, your support and resistance levels, and when you have to find them on a chart, could have occurred quite a long time ago. Okay, so if you can find this pricing comment in recent history, it becomes more valid. When you can see how many times price reacted to it, okay, we can see how good it is. So when you're looking for your support line, you would look for, in a downtrend, you would look for prices in common, but it has to have had spent significant time at that price in 2 to 3 different periods of time, not just 5 minutes ago, not just 10 minutes ago. Was it when it was trading at this price early this morning or 3 days ago, depending on what type of chart you're looking at and what type you're trading? Was this price? Because a lot of times, if you're looking just in the last 15 minutes, it just bounces off that price because prices don't move that far. So you want to look at how far back it went and how recent those results were. Okay. Another group that make up resistance are ones that bought at or near resistance and are trapped when prices fell to resistance. Okay. So you can see on this chart, here you have your buy levels every time you hit the support, and it hit the resistance, and then every time it would bounce and form a new buy level, hit a new support, you could keep buying your asset going up, because you have to look at it in conjunction to the trend. When price is moving up, you want to trade with the trend, so you would be buying at support levels. If price is moving down, you would be selling in the opposite direction. And once you've established these support and resistance lines on your chart, and you have this uptrend, you can then determine what levels you might want to consider buying at. But you want to look long and be careful. So the way I do it, and what I suggest is my favorite is called eyeballing. It's my first step to putting any of these on charts. Because years ago when I started charting, we didn't have all this computer information. We didn't have all this stuff flowing out. So we had to put straight edges on charts and look for common areas in which price had action and reaction. Okay. Because technical analysis is not an exact science, it's useful to create support and resistance zones. Each security has its own characteristics, and analysis should reflect these intricacies of the security. And this is one of the reasons you don't want to be trading a million different assets. For instance, I limit myself only to a handful of assets, and mostly in commodities. Some people jump from a stock to a commodity. They have a system, and they don't care what system. But the thing is, if you get to know the personality of an asset, you get to feel their support and resistance line. You also get to see how you understand and feel how much they move. Like if you're driving home from work, and you know you're leaving work at 3 o'clock in the afternoon, not at 5 o'clock at rush hour, you know on the highway you're going to sail all the way home at 60 miles an hour. But if you can leave work later and it's rush on the highway, you're only going to get home at 40 miles an hour because you know the intricacies. So you can't just assume, just because the speed limit on the highway is 60 miles, that you're always going to get to go 60 miles an hour. Okay. So the key is identification of support and resistance levels to be successful. Even though it is sometimes difficult to establish exact support and resistance levels, being aware of their existence and location enhance your analysis. So let's go over, I've got my Euro US dollar chart I set up I think last week for our class, and let's move it forward because we can see a big change in price movement. Okay. So this is the Euro US dollar chart on your screen. Now, I color code my stuff. And my color codes mean something to me, but they won't mean anything to you. Okay. And this is the thing about using somebody else's charts in your own. The nice thing is when you set up your own charts, you color code them with things that are comfortable to you. So the first thing I do on my chart is I put my trend lines on there. Now you see this chart was done back here when the assets were trading here, actually when asset prices were here. Okay. Now the markets have moved forward, and as you can see, the support and resistance levels are no longer right now holding true because we had the euro gap up and the euro is trading much higher at the moment. So let's take and extend my trend line, which was still a valid trend line right here because it hasn't been broken. Actually, let's do it as one line. Let me just get this off of here. And let's extend. So this is the trend line that was drawn a week ago. We extended forward. It's still a valid trend line because, as you can see, it hasn't been broken. The euro traded on that trend line, bounced off, touched it, bounced off, touched it. Now the euro's gapped all the way up. It was all the way up here. It's as high as 110.20. Now it's falling back down, and we would expect it to come back down somewhere around landing on this trend line, so this trend line is still holding true. Now, what we need to do is we need to establish the current support and resistance levels. Now, the first thing, like I said, I do eyeballing. So if I eyeball today's price movement, and let's draw a line on here. Let's get my marker up here and eyeball it. Well, we can see the price was up around this range, right where it's trading now, and we had a lot of activity right directly on this level at 108 and change, 108.67. Look at all the opens, highs, lows, and close on this price, and it's just trading right now on that support level. Okay, so that's a very good support level. So let's put this on the chart. Okay, so we're going to draw a horizontal ray, and we're going to try to get it right on. There we go. Now, we've got that on at 108.650. Okay, the euro is currently trading at just about at 108.675. Now, we want to see what the next levels are above and below that price. Okay. Now, we're only looking at right now on this chart for today. If we want to go back a little bit farther to really validate these prices, we're going to have to go look at that. The price of this asset hasn't been near this level in the euro in quite some time. Okay, so let's go back, and this is on a 4-hour chart. So let's go back to a 1-day chart and see. Okay, well, there it was all way above this price, but let's see if we can get another. Yeah, we have another support line here. So let's put that on here, a lower support line. It would be just about here. Okay. And then we want to eyeball, and we're going to go back because I'm looking at older, I pushed it back as far as I can. And then we have another resistance line. Here, it touched the highest it traded today. If we go back here to November, we can see, look at that. We had an open and close. We had all of this congestion on this price. And then we go back until August of last year, we had all the congestion on that price. So that's a fairly good thing. So let's go back to our 4-hour. Okay, somebody asked me, I wonder if you're going to demonstrate on the live MetaTrade 4 platform. No, I'm not going to demonstrate anything on a live. We didn't have a Meta-4 trading platform up at all, but this has to do with charts, not platforms. Okay, charts are charts are charts. Support and resistance is the exact same support and resistance level on TradingView.com charts as it is on MetaTrader 4 charts, as it is on Investing.com charts, as it is on the charts from all the other servers. Support and resistance has nothing to do with the platform. It has nothing to do, charting has nothing to do with any of those. Those are just the charting services that are offered to you. Okay. So yes, you could have used the charts on the X90 Trader platform, but I use my TradingView charts because this is where I use for everything. Okay. Now, okay, so we now have our support and resistance lines that we use for our eyeballing. Now, there are other ways to get support and resistance. One of these is from something called pivot points. And we can get those all over the web. They're mathematical calculations, and they're available all over the internet. Hold on one second here. Okay. And we can go right on investing.com, and we click under technical analysis, and we go to what's called pivot points, or we can go to the technical analysis summary, and we can find them right here under what's called pivot points. Now, these are the same numbers. No matter where you're getting from, these are, again, the same numbers. Okay. So since we're looking at a 4-hour chart, you want to make sure you have as close as possible in your same calculations. So we're going to click on 5 hours because it's what's available here. And we only want to look under Pivot Points Classic. And we can see here the support level is at 108.43 and the resistance level is at 108.80. So we can use those as our secondary lines at 108.43. And I'm only going to put one level on because I don't have time to put levels 2 and levels 3 on the chart, and 108.80. And we're going to go draw those onto our chart also. So we're going to go and we're going to make these in red. And we're going to put these on at 108.43. I'm just trying to get it on here. There we go. And we have 108.80 for our next resistance level. So 108.80, 108. Okay. So now what we have is we have two different sets of support and resistance levels, and we're starting to get very defined zones. The third, and like I said, I always use a third method, and then we can use our Fibonacci levels, our Fibonacci retracement levels, to give us support and resistance. We can also use Gann fans. There are many different sources of support and resistance, but I use 3 because the more levels you have, the more defined you're making it. Also, the more important that you have is if you're making a trading decision or you're looking for an action or reaction to a price, okay, the more levels you have, the more important it is to you. Okay, come on, Fibonacci levels. So we're going to go here and use this as the bottom and use this as our top. Okay, so now we've got to define, and we can see we have a definite Fibonacci level right here at 10. I can't see it under my numbers. It looks at 108.40 is a very significant level. So we have all of these levels that are helping define our support and resistance. Okay. Now, you're not going to learn any of these in one class, especially Fibonacci. Now, we have all kinds of classes. In fact, we have a class coming up next week or the week after on Fibonacci retracements. You're not going to understand all these. You're not going to master, you're not going to learn any of this tonight. Tonight, we're just talking about the concept of support and resistance as something that you should know about so that you can go out and spend time learning about them and how important they are. So all we're trying to do is increase your knowledge base. Now, if you decide to start trading with X90, they offer all kinds of education. So they'll teach you along the way, but you have to learn these. But what this is, like trend lines, support and resistance levels are part of your basic concept that everybody needs to know to trade successfully. Because even if you decide, okay, when Russia invades Ukraine or when OPEC decides to cut oil production, we're going to see oil prices soar. That's common sense. So you see the headlines in the paper that Saudi Arabia decided to cut production by 1%. Oil is going to go up. But how do you know what level oil should go up to? And as it's moving up, where do you think? Will it keep on rising? Will it start falling down? Where will it bounce off of? You're not going to get that out of your head. You're not going to get that out of the headlines of paper. You're going to get that from your charts. And what's going to help you decide each of these levels and where it's, because like I said, it doesn't say it can't move above it. It says you should expect some type of action or reaction at these levels so that you can help decide where to put your prices and determine what's going to happen in the near future. So let's go back to my PowerPoint for a second. Okay, so the key is the identification of the support and resistance levels is essential. Even though it is sometimes difficult to establish exact support and resistance levels, being aware of their existence and location can greatly enhance analysis and forecasting abilities. Another great way to find support and resistance levels is to mark levels in the past where price had a difficult time breaking through. As price moves up and down, each level that price is bounced off of could be a level in the future that price bounces off of again. This is a manually intensive method and takes time to draw on the currency pairs that we trade, but can pay off in the long run. So locating swing highs and swing lows. Okay, so we went over and looked at the charts already. So swing highs are when price is moving up in an uptrend. The swing high is the highest point it made. Swing lows are the lowest point that it made. And we can start establishing, and the more times that we see actions or reactions to these levels, the more important they are. And then we can use those levels or draw those levels out into the future so that when price moves to this level, we can then expect something. The more times that price bounces off support or falls back from resistance, the stronger these support and resistance levels become. It almost creates a self-fulfilling fantasy. The more those historical patterns repeat themselves, the more traders know and the more confident they become in forecasting the future behavior of an asset or stock. Understanding the concept of support and resistance, trading ranges, breakouts, breakdowns can be quite valuable to all traders. Support and resistance is one of the strongest and most dependable tools available to a trader. Remember that it is best to use any tool along with other indicators when deciding whether or when to take or exit a position. Now, support and resistance analysis is an important part of trends because it can be used to make trading decisions and identify when the trend is reversing. For example, if a trader identifies an important level of resistance that has been tested several times but never broken, he or she may decide to take profits as the share price moves towards this point because it's unlikely that it will easily move past that level. Now, we talked about psychological levels, and then we just looked at pivot points and pivot point charts. Okay. So again, we get these directly off of the pivot point charts. Okay. And then we have things like GAM fans. GAM fans also give us a great line of support and resistance. So there's many different tools that you can use. Okay. You have to determine what they are. So most experienced traders will be able to tell you many stories about how price levels tend to prevent traders from pushing the price of an underlying asset in certain directions. For example, we'll take a look at an old price on Amazon. Okay, let's imagine that Jim noticed that the price fails to get above $39 several times over the past several months, even though it has gotten very close to moving above it. In this case, traders would call the price near $39 a level of resistance. Okay. And therefore, if you're trading or buying the asset to go up, you would look to sell it at that, or to get out of the market as it approaches that $39. Doesn't mean it won't break above. Or you're looking to sell it, you might take it when it hits 39 and bounces off of that resistance level again, because we know it's going to fall back down. Determining future levels of support can drastically improve the returns of a short-term investing strategy, because it gives traders an accurate picture of what price level should prop up the price of a given security in the event of a correction. Now, there are some basic rules, okay, as opposed to tips. Okay, first of all, we want to verify support and resistance. Support and resistance often act as decisive trend changers. So when you see trends moving up and you see a definitive hardcore trend and it starts moving up to that resistance level, if it bounces off there and is not able to break through it, it will then reverse the trend. That means the most likely that trend is about to end. Now, you need other indicators with that, especially volume, but it's a good indication of how strong that current trend is. Now, if support is violated, that same level will act as resistance. So again, here you can see as the price moved in a downtrend, it hit this support level, bounced up, it came back down, then broke through that support level, moved way back down. Eventually it moved back up, as the trend, and there's many different support levels, but it hit that level again. That level now served as resistance, and price declined from there. Now as price is moving back up, this would be an important level, because we would expect price to come up and touch that or come near that and bounce off of it. If we see it's supported again and it bounces off of that resistance line, we might want to trade that asset to go down. It could then move above that line, and that line then reverts to being its support level. Okay. Now, the more often a trend line is tested, the more valid it becomes. The chart here shows how important 3250 was, with 4 separate challenges of this level over a 4-month period. So we can see on this asset, okay, the price was declining, hit that 42 level, the 3250 level, bounced off it, came back up, then came back down, and then broke right through it again, but then came back above it and wasn't able to sustain it and bounced off of it. As it was moving back up, it hit that level again, bounced off of it, and we have 4 different cases. So this 4th case, okay, this 1st, 2nd, and 3rd case were just kind of maybes. When you see a 4th retracement or a 4th reaction, that's telling you the price is going to bounce down, and it might have told you to enter a sell order at that point, because 4 levels, 4 bounces off of that price level tells you that level is critically important. So as you can see, there are many different ways to validate and many different ways to use it. But one of the most important is that if a resistance or support level is associated with increased volume, okay, that tells you that the traders are supporting that level. Okay, so we can see that since September 2008, 4250 on this chart has served as a resistance level. Each time price level tested the 4250, we see an increase in volume, because each time it touched that, the traders entered the market in sell positions and bounced off of it. So there were, okay, because remember, you trade with the trend, not against the trend. So they were looking for it to bounce the support level and then sell it to go down again. Okay. And time matters. The more recently a level has been established, the more useful it is. A problem with the current bear market is that quick losses had many traders looking for well into the past for support levels. Like when we saw the S&P and the Dow in the U.S. breaking record highs, even FTSE hitting record highs. It's very hard to establish support and resistance levels because it hasn't been near that, hasn't traded that price before. Or when you saw something at $12.50, when you saw gold at $1,250, the last time was 5 years ago. Then it fell down, and now it's trading, near 1300 again. Well, we have to go way back to find those support and resistance levels. Sometimes they are helpful, but they're not as important. So time does matter. So, so sometimes you just can't find anything in recent history. So in conclusion, support and resistance levels are key mile markers in a security's progress. Whenever you're developing trading strategies, consider these points on a graph. Doing so will help you set profit targets and prevent frustration when eventual reversals occur. And I'd like to thank you very much for joining us tonight. Give X90 a shot. We looked at their platform. It is so nice, so friendly, so easy to use, and so fast and so intuitive. It makes trading easy for you. So go to www.x90 and set up a demo account. Try out the platform. If you like it, you can open up a real account. But it never hurts to try something new, find out how much better it is than where you've been, and how much less involved it is, and how nice their charts are, how fast their execution is, and you might find that it's a great place to start trading. If you're new to the markets and you want to start out with somewhere it's not complicated to make a trade and get it correct, and somebody, a company that'll help you with all, give you a hand along the way, try X90. They're a great place to start with or be with. So thank you very much for joining us tonight. Have a great week, and once again, thank you for being part of the investing.com family as well as for joining us tonight. Good night now.